everyone. I'm Dan Bossie, President of Ag Resource. I'm joined today with Dr. Bill Tierney, our Director of Market Research here at Ag Resource, and we're just talking a few minutes about what's going on in some of the macro markets, and particularly China. The Chinese stock market has seen its biggest loss really going back to 2007 this week, an 8.5% loss in the Shanghai Composite. As we think about the Chinese market, we in agriculture are all concerned because it's one of those hot areas of growth that we at least hope for going forward.
Well, it's the only area of growth in the case of global soybean demand. You take a look at the increase in soybean demand, the rest of the world import demand has been relatively constant for the last 12 to 15 years. The only growth has been in China.
That being said, Bill, I mean, what worries me as I look at the numbers is Chinese GDP has been growing an average of $700 a person going back to about 2003. And we've gone from a little over $2,000 to where we are today at about $8,500, or some would even say closer to $9,000 per person. Can we keep some of those growth rates continuing? I mean, what do you think going forward?
Well, I'm not an expert in developmental economics, but obviously the bigger the pie gets, to sustain that growth rate on a percentage basis is not likely. However, there are some major structural changes that can occur in an economy as it transitions from an export-driven one that's producing manufactured products to one that's producing more services. It's possible that structural changes that the Chinese economy could undergo in the next 10 to 15 years could sustain a very high growth rate. I'm not predicting that. And more importantly, over the next year or two, that's what the agricultural markets are most interested in. It looks like China's economy is slowing down. It looks like per capita income growth is slowing down. The question is, how does this affect food consumption? How does this affect import demand? And that's unclear at this time.
It is. The only thing I always look at as an economist is when we look at Chinese pork consumption or red meat consumption, that has really stagnated the last few years, which I think is part of the reason why there's been this liquidation of their hog herd as profitability slumped. So you wonder, as China ages, as their economy and their population ages, if we'll be able to keep up some of the caloric intake that they've had before.
Again, not being an expert in the area, but being familiar with some of the research, there still is a lot of basic grain consumption going on in China. As you move a higher percentage of the population to rural areas, as you raise more people's per capita income, it's likely that you're going to see a shift in the diet and more meat consumption and less grain consumption. So on the meat side of the equation, there still is significant growth potential. And there are factors that are going on that is likely to continue to cause it to grow. Here again, in the last 6 months, total pork production, according to the National Bureau of Statistics, declined about 5%. Some of that was due to disease. Some of that was due to less production because of losses in the pork sector, but some of it was due to the crackdown on banqueting that the Chinese Communist Party had implemented. They said this is we're eating too much at these banquets that are sponsored by large companies, corporations, and local party officials. We're not going to be doing that anymore. So it clouds the picture as to what's happening to meat consumption. Pork production's down 5%. But pork prices and profitability have recovered recently, so we may see a recovery in pork production and pork consumption maybe over the next 6 to 18 months.
I always thought China's data is an enigma within a riddle, but anyway,
it is.
It was fun talking with you today, and China remains the one hope, if you will, for U.S. exports and grain demand going forward. Thank you, Bill, for joining us. My name is Dan Bossie, signing off for today.